Have you ever wondered, if you work hard for 40 years and still never truly break free, is it really your fault? Or is it the game? Are you sure you're living in a free economy? Or are we inside the greatest magic trick in human history, where money is created out of thin air, and your belief is the fuel? We're told, study hard, get a good job, buy a house, take a mortgage, pay it off, for 30 years retire. It sounds reasonable, stable, civilized. But what if it's just a script, a form of social programming? What if the entire system is like a giant casino, where you think you're playing to win, but the rules were written by a small group of elites long before you were born? This isn't conspiracy theory. This is mechanism. And today, we're taking the mask off the game. Look around you. People working 9 to 6. Drivers grinding 12 hours a day. Students graduating with debt. Families paying more interest than the original price of their homes. We call this adulthood. But what if it's a legalized form of modern slavery? No chance. No whips. Just credit contracts. You think you're free because you choose your job. But can you choose not to participate? Can you live without money? Without paying taxes? Without banks? Without the endless growth machine? Try saying, I don't want to play. What happens? The economic game is a two-layer illusion. Layer 1. It gives you opportunity. Anyone can make it. Layer 2. It keeps most people in the loop. You're encouraged to consume. Encouraged to borrow. Told inflation is normal. Told rising house prices mean growth. Told national debt is policy. But few people ask the most basic question. What is money, really? Is it gold? Is it stored labor? Or just numbers on a screen? In 1971, when the U.S. ended the dollar's convertibility to gold, money stopped being tied to something physical. It became based on trust and political power. We'll go deeper soon. But pause here. A society where money can be created digitally. Where inflation erodes purchasing power every year. Where you must invest just to avoid falling behind. Is that an economy? Or a chessboard? This system isn't entirely evil. It creates technology, hospitals, infrastructure, relative stability. But stability for whom? And at what cost? If you feel like the harder you work, the more anxious you become. The more you earn, the more you owe. Maybe you're not incompetent. Maybe you're just playing a game whose rules were never explained to you. And the most dangerous thing isn't hidden exploitation. It's believing it's natural. Let's go straight to the heart. What is money? You trade your time for it. You stress over it. You sacrifice your health for it. But do you understand it? Before 1971, money was at least theoretically tied to gold. When President Richard Nixon ended the gold convertibility of the dollar, everything changed. That moment altered the entire game. Before that, dollars represented gold. After that, money became pure fiat, based on trust. That was the first illusion. Modern money is not wealth. It is debt. When a bank gives you a mortgage, it doesn't hand you existing money. It creates new money digitally. You sign. Debt appears. Money appears. Money equals debt. If all debt were repaid, much of the money supply would disappear. That's how fractional reserve banking works. If money is created through borrowing, then expansion of debt is required for expansion of money. The system needs you to borrow, businesses to borrow, governments to borrow. Growth depends on credit expansion. When credit stops, crises happen. Look at 2008. When housing credit froze, the system nearly collapsed. Because the game is built on leverage. Inflation. You're told 2 to 3% is healthy. But inflation is dilution. If new money is constantly created, each existing unit loses value. Like adding water to coffee. The cup looks full. But it's weaker. Inflation quietly transfers wealth from savers to early receivers of new money, typically governments and large financial institutions. By the time it reaches workers, prices have already risen. That's silent redistribution. Why can't you simply opt out? Because survival requires participation. You need money for housing, food, utilities, healthcare. You must pay taxes. Even if you don't play, you're still on the board. This is soft coercion. Not violence, but structure. The system uses convenience. Credit cards. 0% installment plans. Buy now, pay later. You feel empowered, but you've pledged your future labor. A 30-year mortgage equals 30 years of forward-committed time. Miss payments? The contract activates. That's legalized enforcement. Yet, fairness demands balance. The system provides stability, access to capital, infrastructure, crisis response. Without credit flexibility, growth would be slower. The issue isn't existence. It's unconscious participation. You were programmed to chase income, not to understand capital structure. Money is a medium of exchange. Assets generate value over time. Cash doesn't produce income. A business does. Rental property does. Equity does. The working class accumulates money. The elite accumulate assets. That's the strategic divide. Fractional reserve banking multiplies deposits. Government deficits expand money supply. Post-1971, money creation accelerated dramatically. Growth became dependent on expansion. Because debt carries interest, the economy must grow to service it. Stagnation equals collapse risk. Therefore, expansion becomes mandatory. Asset inflation creates the illusion of wealth. Rising house prices feel like prosperity. But if everything rises, are you richer? True wealth comes from productivity, not paper expansion. Tier 1. Labor. Trade time for money. Vulnerable to inflation and layoffs. Tier 2. Leveraged middle class. Own assets, but financed. Dependent on income streams. Sensitive to interest rates. Tier 3. Rule designers. Access cheap capital. Influence policy. Acquire assets during crises. This isn't moral judgment. It's structural awareness. Inequality grows because asset ownership benefits from monetary expansion. The system favors asset holders, not savers. Understanding this is not hatred. It's clarity. Socialism seeks fairness through redistribution. Its moral appeal is strong. But centralization of power introduces risk. Free market capitalism promotes efficiency and innovation. But unchecked, it leads to concentration. Bitcoin emerged after 2008 as decentralized money. Limited supply. No central authority. But markets remain human. Speculation. Volatility. Whales. No system eliminates human psychology. Greed and fear remain constants. There is no perfect escape. Only higher awareness. Awareness without action is useless. Stop blaming. Start adapting. Don't worship money. Understand cash flow. Avoid consumer debt. Use strategic leverage. Study cycles. Avoid herd psychology. Invest in your skills. Your productivity is anti-inflation. Stay flexible. Diversify. Prepare for scenarios. True awakening isn't rebellion. It's strategic clarity. You don't need to destroy the system. You need to understand it. Because in the economic game, the real loser isn't the one with less money. It's the one who never understood the rules. And financial freedom doesn't begin with more money. It begins with deeper awareness.